The Federal Reserve just wrapped up their two-day FOMC meeting and they cut interest rates yet again. They also gave us a glimpse into the future of this economy and what are they going to do about it. Also, Jerome Powell, the chairman of the Federal Reserve, was asked to resign. I have all the details for you here in the video. Let's get into it and discuss what's going on. All right, so yes, the Federal Reserve wrapped up their two-day meeting today. It's actually a day delayed because of what has been going on so far this week, but they have this meeting once every 6 weeks, and the last one was back on September 18th when they cut interest rates for the first time in several years by 50 basis points. Now today, they cut by another 25 basis points or 0.25%. This is highly anticipated. We knew that this was going to happen. So this does not actually come as much of a shock whatsoever. So we were expecting this fully. However, based on what the Fed was saying, in other words, when I say Fed, essentially I'm saying Jerome Powell during the press conference after the initial release on what they're going to do with interest rates, he comes out in a press conference. He's asked a bunch of different questions. And based on what he was saying there, they're basically indicating that, hey, yep, the economy is slowing and we do want to bring these interest rates down because inflation is brought down almost to our goal. It's not quite there yet, but it's very, very close. And they want to start bringing these interest rates down now because it's basically putting pressure on the overall economy. It's putting pressure on consumers. It's putting pressure on businesses by keeping these interest rates as elevated as they are. Another thing, too, is that if they keep these interest rates elevated too long, basically what it's going to do is going to get away from them like a runaway train as far as the economy contracting too much, then we fall into a recession. So basically what they need to do is thread the needle really, really good on this. In other words, they can still bring interest rates down very slowly, but they've indicated, but also if they go too fast, we may see a resurgence of inflation back in our economy, which again, don't want that to happen again, right? Prices are still very strong. Prices are still staying very elevated. But if we saw a resurgence of inflation, that means prices would be, increasing yet again more rapidly. And we definitely don't want that. We just went through that for a couple years. I think we're good for a while. I don't think we want to go through that again. Okay, so that's the situation, is that they need to thread the needle so that they don't go too fast by cutting interest rates and bringing inflation, bringing inflation back up again. But if they go too slow as well, they may actually contract way too much on consumers, the job market, and all things like this. So they really need to work diligently and very slowly. And they've also indicated as well that if inflation starts coming back up, they can always pause, or they can actually raise interest rates yet again. So could you imagine that right now, raising these interest rates back up? So that's kind of where we're at right now, okay? And again, like I said earlier, this was fully expected. We pretty much had a, I don't want to say guarantee. We pretty much had a really good idea that this would be happening. This comes as no shock whatsoever. So, that's good. It's nice that they're bringing this down. Now remember, if you have any kind of variable interest rate, or you're locking in an interest rate right now of a, of a locked interest rate, a fixed rate, anything like that, this will help a little bit. Now, it does not help immediately. It helps like in 30, 45, 60 days. It doesn't help right away. That's kind of one of the confusion points that's out there, is that, oh, they cut interest rates. That means I'm going to feel the impact right away, right? No, it actually doesn't really work that way. No, it actually takes quite a while for this kind of to work its way through the economy and to kind of be effective. You don't really feel the effects of this right away. It's going to take a couple months until we actually feel this. So, and it's not even going to be much. I mean, let's be real. It's 25 basis points. It's 0.25%. It's not that much at all, right? But we definitely don't want to discount that. We'll take it. Again, like I said earlier, if you have variable interest rates on anything like, I don't know, credit cards, a line of credit, a home equity line of credit, it could be, what else? Fill in the blank. Anything. An adjustable rate mortgage. I mean, literally anything. If you're trying to get a fixed rate mortgage right now, it'll impact fixed rate mortgages. It will eventually a little bit, a teeny tiny bit. But for the most part, if you have variable rates on anything, it's going to bring that down a little bit going forward. Now, remember this much as well. If you happen to be one of the lucky ones who happens to have maybe a little bit of money saved in a savings account and you're getting a little bit of interest on that, guess what that also affects? Yeah, exactly. It's going to also bring down the interest rate on your savings account. So if you have any money saved in a savings account, that's also going to feel the impacts of the lowering interest rate here, as discussed. Okay, so There you go. It's going to help out a little bit, and we may see the impacts in the economy here. Now, remember this much as well. I mentioned this in the video this afternoon. We have next week the inflation data coming out. Another key metric, this is going to be October's inflation. Well, if you heard my videos over the last couple weeks here, I've talked about October, and October is maybe going to be an inflationary month. There's been a few different things that have happened in October. Obviously, here we're in November already. A weekend in November already, but October was somewhat an inflationary time because of the different events that took place throughout the month. Some inflationary events took place, so we may see that in this next inflation report next week. Also, remember, the job report that we got a week ago on the first of the month was terrible. 12,000 jobs. That's it. 12,000 jobs. That's really bad. That's really, really bad. So I'm kind of interested to see this because, the Federal Reserve, yeah, they had to have taken that 12,000 into consideration. And the next report that we get out here in about, when is it? I'm not sure the exact date, but it's the first Friday of December, whatever that date is. I'd have to look at a calendar. But whatever that date is when we're going to be getting November jobs data as well. And that's going to be a good one because it's going to be interesting to see because that'll have a lot of holiday hiring in there. It should. If it doesn't, it's going to be a major concern, right? Because this is the time of the year where we're, jumping in and getting these seasonal workers on the payrolls. So anyway, some big key information that we want to watch going forward. All right, now lastly, really quickly here, Jerome Powell was asked, would he resign? If asked, would he resign with the new administration? And he said, no, I'm not resigning. No, not going to do that. So we'll see what happens going forward with the overall fate of Jerome Powell and being the chairman of the Federal Reserve. I want to tell you this much. I don't think with the new administration, I don't think he's going to have a job anymore as the chairman of the Federal Reserve. He'll get a job somewhere. He'll do something, but he's not going to be getting that job anymore, which, by the way, I'd have to look this up again, but I believe he makes $237,000 a year. I'm pretty sure that's what it is. I could be wrong on that a little bit, but I thought I read somewhere not that long ago that it's $237,000 a year. Not a bad salary. Not sure about you. And again, I could be wrong on that by a little bit, but not bad. 237. That'd be nice, right? That's a lot of money. That's like, what is that? That's $20,000 a month. There you go. Yeah, it's a little shy of 20 grand a month. Could you live on that? Right? Yeah, exactly. Anyway, hope you're doing well. Thank you so much for watching this. Really appreciate it. Please subscribe down below if you haven't done so yet. Totally free to do so. Big subscribe button down there. Feel free to like the video. Thumbs up button right down below. Otherwise, feel free to share this video or any others here on the channel with your friends on social media. There's a share button right down below. Thank you so much. Just think of a couple people that you can share these videos with and go ahead and do that. Thanks again. Really appreciate it. Otherwise, the other 5,000 videos waiting for you here in the video library. Check those out. Otherwise, down below in the description at the top of the comment section, I've hand selected some videos for you there. Check those. Otherwise, right now showing up on your screen as well, you'll see some videos. Thanks again. Enjoy your day. Have a nice evening, and I'll catch you again tomorrow.